The scenario feared by every oil trader is unfolding in front of our eyes. An attack on Iran, a country with the power to block the Strait of Hormuz, a critical passage with around 1/5 of the global oil supply passing every day. Then it's no surprise that the price of the commodity powering the global economy shot up by almost 10% on Monday, even though the market has already priced in some of the risk involved in the confrontation with Iran due to build-up of US forces in the region in the weeks leading to the attack.
The price movements today are at least moderate for the time being. However, it is to be feared and very likely that the oil price will rise significantly.
More dire news came from the gas market, where Dutch front-month futures, considered Europe's gas benchmark, traded 23% higher at almost €40 per megawatt hour by 10 a.m. European stock exchanges opened lower on Monday, with major bourses dipping around 2% in the early morning hours, but regaining some strength by the afternoon.
The DAX got off to a weak and nervous start, and the reason for this is obvious, of course. It's the conflict in the Middle East, Iran, and the fear of how it could escalate further.
Disruptions in the Middle East may also have an impact on Central Europe and Poland. The country gets more than half of its oil supply from Saudi Arabia, but Poland's sole petroleum company, Orlen, said on Sunday that there's no immediate risk to the country's oil supply.
Saudi oil is sent to Poland from Yanbu, a big oil terminal on the Red Sea coast, so it bypasses the Persian Gulf completely, and this terminal can process 7 million barrels a day, so it's quite big.
And the market appreciates that, with the company's shares rising by more than 5% today. Another issue is gas supply, as Poland gets some of it from Qatar in the form of LNG or super-chilled gas. But even here, the exposure is limited. Out of 81 shipments the country received in 2025, only 17 were from Qatar. So experts are calm.
The winter season is drawing to a close, so demand for natural gas is lower. What's more, Poland has enough of the fuel left in storage to cover 30 days of demand, so there shouldn't be any problems.
But even Paszkowski says longer disruptions in the Middle East can have unpredictable consequences.